Welcome to The Exchange with KB, where you get to know interesting people and their thoughts on entrepreneurship, building and scaling businesses, success and failure, and much more. If you like this episode, go to KirillBensonoff.com to sign up for occasional updates. Today, I'm super excited to talk to Caitlin Long, who is a 22-year Wall Street veteran and has been active in Bitcoin since 2012. She's also co-founder of the Wyoming Blockchain Coalition and helped drive its trailblazing 2018 blockchain legislation. Hey, Caitlin, welcome to the show. It's great to have you.
It's my pleasure. Thank you.
Awesome. I'm super excited talking to you. So let's start at the beginning. I'd love to learn a little bit about your background for the folks that don't know you. Maybe tell us where you grew up, how you grew up, and tell us a little bit about your past.
I'm a Wyoming kid. I grew up, born and raised there, went to undergraduate there before going off to see the big world, and got a law degree and a master's degree at Harvard, then went to Wall Street for 22 years and found Bitcoin and blockchain in 2012. Started getting involved with it personally 2013 and then professionally 2014.
Awesome. Yeah, that's a quick recap of a lot of details that you've gone through. So let's start with Wall Street. I mean, can you hone in on sort of how you discovered this? Because you said you went to law school. I mean, how did you discover economics and finance? How did you get into that?
Well, I did that in undergraduate. My degree at the University of Wyoming was political economy. Started out in engineering, and I have tremendous respect for you engineers because I didn't, the math got me. I was pretty good at it, but I wasn't going to be able to get straight A's, let's put it that way. And ended up gravitating over to political economy and was fascinated by jurisprudence and legal and political systems. And at some level, I'm kind of a systems person. I like understanding how systems work. And very recently, in all the work that I've been doing at the University of Wyoming, the head of computer science actually said, you would have actually been a good computer scientist because of the way I think about systems. I was surprised at his comment, but I think that's the theme that runs across here is thinking about systems and wanting to understand how they work and why they don't work and how they might be able to work better.
Right. And so when you went to law school, did you already know that you're going to Wall Street and are gonna sort of tie law into the finance world?
No. I had no idea. I wasn't even that interested in, watching stocks like so many people in my class were. Frankly, it's as simple as this. I was in so much debt. I walked out of Harvard with more debt than my parents' house was worth. And they co-signed on my student loans, and I, needed to sell myself to the highest bidder, figuratively speaking, to, get that debt paid down as fast as I could. And frankly, I'm surprised I stayed as long as I did. But I really actually had fun and found, really interesting things to work on and ways to make meaningful contributions. That once I understood how the real world worked, I could still be very comfortable that I was actually doing something good for humankind, as opposed to, just sort of being the banking industry gets maligned for so many reasons, many of which are deserved, but not all of which. And I am not as critical of the banking industry as, some of the folks in the crypto space are. Mm-hmm. And I found ways to do things that were consistent with my philosophy while still staying on Wall Street.
So thinking about like what's wrong with Wall Street, if you could think back, I mean, do you recall, and just to kind of put it in perspective as far as my question, Wall Street, as far as I know, went through iterations of perception. I believe maybe at the time you joined, it was a place where a lot of people wanted to go, the best and the brightest wanted to go on Wall Street, and the perception was that you could make lots of money, you can advance, etc. Then with the financial crises that happened in 2001, 2007, that perception may have changed or maybe it didn't. Can you give it your take on that?
Yeah, it's a very interesting question because, for a lot of the folks in crypto, I'm quite a bit older than the average crypto person. And a lot of the folks in crypto, the financial crisis of 2008 is perceived to be a big event. And no question it was. It was the worst of the crises that I've lived through, but I've lived through a lot. The 87 stock market crash, I wasn't working on Wall Street then, but that was also pretty bad. And in fact, actually, I came into Wall Street in 1994 when the bond market was in an outright depression. And, that didn't get the headlines. The bond market is still not as well understood as the stock market. Most people, talk about the Dow or the S&P 500 and point to that as some evidence of the health of the economy. In fact, actually, the bond market is quite a bit bigger and so much more meaningful to the health of the economy. So it didn't capture the headlines, but that was a massive crash in 1994, which is right when I started, right? And we had, crashes in 99, 2000. That almost took down the bank that I was working for at the time. So I'm used to it. In some ways, as I'm thinking out loud, it's analogous to what's happening in the crypto space. Most people think that a mainstream financial system is relatively stable. It's not. And the reasons for the instability are quite a bit different between the price instability of crypto versus the systemic instability of the financial industry, which shows up as price instability. The causes of the volatility are very different, but in many ways, having had the perspective of a long career, I'm kind of used to that volatility. Volatility is really the nature of these systems. Stability is not, and a lot of the perceived stability that we've perceived in the last few decades was truly artificial and was engineered by the Fed.
Mm-hmm. I just want to remind, as you were talking, I actually looked at the NASDAQ charts for some years back recently, and in 2001 or so, NASDAQ, and a lot of people have forgotten this already, has gone down from about 5,000 to about 1,000. So it's about an 80% or something like that drawdown.
Oh yeah.
And people, and that's like, oh, NASDAQ, that's a stable market, right?
Right. Yeah. And again, the benefit of perspective. A lot of the people in the crypto space, if they just came in the hysteria of 2017, are thinking, oh my God, it's over, it's done. Well, you and I have been around the crypto space for 5+ years, so we've seen these run-ups and crashes, and I've also seen them in the mainstream financial industry. It's that kind of volatility is inherent. It's normal, and I hope over time that volatility calms down in crypto. But I'm, like I've said publicly, I don't think the price is the most interesting aspect. I think it's one of the least interesting aspects of the crypto sphere. I'm much more interested in the tech and the applications of the tech underneath it.
Absolutely. When you think of Wall Street, is there, I want to ask one, but I'm sure there's more than one. Are there one or more things that you would say, because I think that's, you're an expert at the systemic flaws of financial systems. Are there these flaws that come to mind, the big high level ones, or is there one, or is there more than one? Is there things that you think is just inherently aren't working today in the Wall Street or the mainstream financial system?
Yeah, I would point to two. One is that we don't have honest money, and two is that we've got a lot of cruft. I love that word that the technologists use to talk about cruft in IT systems. There's a lot of cruft in the financial system just from the market structure that evolved over time. We have analogous to the phrase tech debt. There's certainly a lot of tech debt in the financial sector, but there's also regulatory debt that is a function of the fact that regulations were put in place that sort of ensconced very inefficient market structures. And how we fix those systems. Sometimes systems can be fixed from within, but more often it's actually a rip and replace. And that's what I think the crypto sphere is offering. And it's kind of funny. The existing incumbents got together to work on something called utility settlement coin, which the crypto folks would recognize structurally as a stable coin. Well, the big banks have been working on this for more than 3 years. they haven't gotten anywhere because they're mired in the regulatory cruft. And yet, out from an outflanking position, out from the middle of nowhere, left field comes stable coins. And all of a sudden now we've got bank stable coins that are popping up. And so we're going to be able to apply the technology, but it's not because it came from within. It's because it came from without. And a lot of players in the existing traditional system recognize that there really is a better way to do things. And I actually think there's going to be a lot of activity around stablecoin.
Yeah, you mentioned regulatory. I mean, what are your thoughts on regulation today? I mean, we could spend a whole lot of time on this, I think, but at a high level, I mean, is regulation something that is stifling innovation because U.S. is the most advanced and the biggest capital market in the world, and it's one of the more regulated ones as well? Yet we still continue to have these crises in different areas. I mean, what are your thoughts on the state of regulatory today?
Oh, yes, it's definitely hampering innovation, no question, because the regulators like the SEC and the CFTC, they don't have the ability to make policy. Some would say that that's exactly what they are doing, but they really don't have the statutory ability. That's Congress's job. Their job is just to apply policy. And so if the laws are outdated, then the application of the laws by the regulators that everyone loves to take shots at is also going to be outdated, but their hands are tied. I'm more sympathetic to them than again, I think a lot of the crypto folks are, because their hands are tied. That said, I've been critical because I do think there are some things that they've overreached on. But I mean, look, how many projects were run outside of the United States because of the SEC threatening that everything is a security? Look, Bitcoin's clearly not a security. At least they've admitted that. They haven't formally admitted that Ethereum is not, but they've implied it, and they've given us no guideposts to understand that if Bitcoin and Ethereum may have started out as a security in the beginning due to the centralization that took place inherently when those projects got off the ground, at what point did they change their stripes? And is there at what point, if they actually ultimately become more centralized again, would they change their stripes back? Mm-hmm. I don't think that either one of them ever will become centralized again. But if the whole idea of the Howey test application is that it's due to the benefits of others, and in the beginning when these projects are getting off the ground, of course there's going to be a concentration among the developers that are working on these projects. And so, it's easier to make the case that a project before it hits true decentralization is a security, but how do we apply that? Nobody has any idea how to apply that. And I don't think they've been helpful in explaining that.
Yeah, I hear you on the ambiguity of the regulations, and totally hear you as well on the law and then the enforcers of that law, so to speak. It seems like, my personal take on it is the U.S. has so much going for it, and now, there's Congress passing law, then we have too many regulators trying to regulate, and as we both know, crypto went through who is it a security under the purview of the SEC? Is it a commodity? I mean, what is it? Right. And all these agencies are trying to leave their own mark on it, and the end result is a little bit of a quagmire, I think.
Oh, for sure. Well, you've experienced it. We were chatting before we started recording the show. You've had your businesses and you've experienced this. And, what I'm trying to do in Wyoming is create a welcoming environment. The regulations that we're putting in place in Wyoming are enabling or clarifying. They're not restrictive. And that's how you build effective systems. I think too many of the regulations that have been passed, especially regarding financial services, are too restrictive or prescriptive of how things have to be done. Well, then when you get an innovation that doesn't quite fit in the buckets, like crypto, no one knows what to do. And I think it's going to be fascinating in the next couple of years. I actually am kind of glad that the price craze is over, and now the folks that are serious about this and applying this can actually hunker down. The developers can get the tech built and rolled out, and the early adapters like myself can give them feedback and get regulations put in place that allow folks to be able to do business with clarity, and we can actually seriously advance the ball. The industry has been overhyped and people have been distracted by that, but I'm kind of glad that we get to put our heads back down and actually get things done.
Yeah, and one thing I want to mention, I want to talk about Wyoming in a second, but I just want to say how wonderful of a job you've done, and the folks that you work with in Wyoming have done with the regulation that you guys are working on and have worked on, because there's a lot of talk about what should be done, but barely anyone's really putting their efforts into getting these things accomplished. So congratulations on all these accomplishments in Wyoming.
Thank you.
Yeah, I'm a big proponent of what you guys are doing. I'd love to hear, actually, if you don't mind, for the people that don't know the details, but I'd love to hear an overview of the regulation that you guys have already passed in Wyoming and what you're working on next.
Yeah, sure. Well, first of all, hats off to the Wyoming folks, right? I was just an instigator of it. Somebody who's been helping to shape the discussion, but it's the Wyoming legislature. It's a few folks who really picked up this ball and ran with it. And I'm so proud of what they've accomplished. And I'm so thrilled that we are actually getting folks to move to Wyoming, not just to domicile their businesses there. But what we passed 5 blockchain bills last year. They were all signed by the governor, and we started with 7, but now we're down to 6. One of them didn't go through in the committee process. So 6 more bills that are coming in the upcoming legislative session beginning in January, and all 6 of those are recommended by their respective joint committees, which in plain English means they have an elevated chance of becoming law. A couple of them are controversial, so we may not get every one of them, but I hope we do. And what they would do is solidify Wyoming as the crypto and blockchain place to do business. Last year, we clarified the money transmitter laws and clarified that as long as utility tokens are not marketed as an investment and meet several other criteria that under Wyoming state law, they're not securities. We did a couple of other structural things that are probably less interesting to your listeners, but this year we're tying it all together and increasing the chance that if the SEC goes after a Wyoming domiciled utility token, that the legal team actually has a better shot at winning in court because of some of the things that we're pretty likely to get passed this year. Those things I'm alluding to are not controversial, so they're likely to go through. And we've got a supportive governor. So just hats off to the folks in Wyoming. I think structurally, the fact that it's a citizen legislature and folks have real jobs and they don't have full-time staffs and they're not in this sort of, money grubbing game of lobbying and pay to play that so many other legislatures have been in, both, of course, Congress and other states. That's what made Wyoming special, and actually made it easier for them to say, you know what, this is pretty cool. We want this industry to locate in Wyoming, and it's starting to happen. It's so exciting.
That is absolutely awesome. So with all of these great things in Wyoming, how does one reconcile that against the national federal law and regulation? Is this a huge challenge? Because obviously raising money in one state could be done, but it's also difficult, and constraining tokens to that one state is also difficult. What do you think on about that? More of a national conversation.
Yeah, well, stay tuned. There are some efforts in Congress to clarify some things. And in fact, actually, I've been in touch with folks in Congress who are taking some things from Wyoming's utility token bill. Will those things ever become law? Congress is so dysfunctional, I don't know. But, we are working on some things. And there are also some things that we'll be doing in Wyoming relating to the bank that I think will be helpful. The banking industry, it's a little bit of a strange thing for me to be talking about, creating a new form of a traditional bank to bank the crypto industry. But the traditional banking industry has shunned the crypto industry almost entirely. You have a few shining examples of exceptions, like Silvergate, Signature, Metropolitan, for example. Those banks have chosen to specialize in banking this industry, and they are doing quite well based on the public disclosures of Silvergate. But pretty much every other bank has shunned the industry, and those banks can't bank everybody. And so, we're going to try to solve that problem. And we actually are working very closely with federal regulators to fit this proposed new banking structure into federal structures that will check some important boxes. We want this bank to be able to be a member of the Fed, for example, because that's what gives this bank access to the payment systems. And so, how do we actually set up this bank so that it can comply with the laws that have to be complied with in order to be a member of the Fed? We have to do all that. It is what it is. Some of that I don't think is constitutional. I've said publicly, I don't think the Bank Secrecy Act itself is even constitutional, but it's the law of the land right now. And until that's been litigated and struck down, which I think it will be, we have to comply with it. And so it is what it is.
Can you tell a bit about the Secrecy Act for the listeners and for myself, because I'm not an expert on that specific legislation?
Sure. The Bank Secrecy Act was put in place in the early 70s. And it essentially, it's a surveillance state, right? In many ways, when I say I think it's unconstitutional, I'm relying on the Carpenter decision that came out of the Supreme Court earlier this year on cell phone metadata, because basically the Supreme Court struck down the government's metadata collection as unconstitutional under the Fourth Amendment, protection against unreasonable search and seizures, and says if the government wants to go get that information, get a warrant. And in fact, actually, very similar surveillance state structures are in place in the financial industry, and is under the Bank Secrecy Act. Originally, the Bank Secrecy Act was upheld by the Supreme Court in the late 70s. But at the time, the only thing that the banks were required to collect from their customers was just the name and address of the customer. They weren't required to track people's funds or the source of the funds or know the customer's customer or, do all the anti-money laundering surveillance. All that's been added since that's been tested at the Supreme Court. And once I think the Supreme Court agrees to hear a challenge to all that, I think under the Carpenter logic, they're going to strike it down as an unreasonable search and seizure. And it's actually kind of funny. I wrote a Forbes.com piece about this. The Bank Secrecy Act has a whopping conviction rate of something like 0.0002%. So, we spend all this money. We make the banks spend all this time and money. And by the way, the crypto companies too, they have to comply with FinCEN requirements, and in tracing who the customer is, what's their source of funds, filing suspicious activity reports. Every time you send money worth more than $10,000, even your crypto exchange in the U.S. has to file a suspicious activity report about you. And it's just a massive surveillance state that has almost no convictions. It's crazy how much money we're spending as a country on this.
That's insane. And so do you think that the banks that are, or most of the banks in the country that refuse to do business with crypto related companies, is it because that they're scared of compliance? Is that the main reason?
Yes, that's exactly it. They don't want to lose their bank charter. And I don't blame them, by the way, because the regulators have such a heavy hand. There's some very interesting things that have come out in the last about a month ago. There was a court case that revealed a lot of information about how the FDIC was behaving in something called Operation Choke Point, which started in 2013 under the Obama administration as an effort to crack down on high-risk industries. And they started with, and again, I put air quotes around high risk. They started with payday lenders, and then it moved on to the firearms industry and tobacco, and basically all the politically incorrect industries that you can think of got harassed, not through the regulators directly, but by the regulators harassing the banks to harass their customers. And they literally, some of the things that have come out, your readers may just want to Google this, and read about Operation Choke Point in the last, the things that have come out in the last couple of weeks about how the regulators pressured banks to close customers' accounts. And so whether it's real or imagined, because officially the Trump administration ended Operation Choke Point, but I think that the long-term effect of that is going to take years to eradicate, because what it did is it made the banks really nervous to do anything outside the box because they don't want their charter to be withdrawn. And one of the interesting things that I read in an American Banker article is that the person in charge of the ombudsman office at the FDIC was one of the people who was the most abusive of his power at the FDIC. So if a bank loses their charter, the appeals process, the guy who's in charge of it is one of the ones who was the biggest abusers of power during that whole period. It's really stunning, right? And so the banks basically I have sympathy for the predicament that they're in. They don't want to lose their charter, otherwise they're out of business. But back to your earlier question, this is the kind of regulation that I think is really stifling growth in the US. Because think about what that means. If you're a logical, rational business person who owns a bank, you're not going to bank anything even close to the edge. And that's unfortunately one of the things that's made it difficult for the blockchain industry. And one of the pieces of testimony that we heard in Wyoming was from the Digital Asset Trade Association, a trade association, right? This is just a cash-based business, not crypto-based, cash-based, and even they had their bank account closed down just because of the affiliation with the blockchain industry.
Yeah,
it's really stunning.
Yeah, it is. I know plenty of people personally that had banks accounts closed, and as well as their businesses were closed and unbanked and so forth. It's absolutely crazy. I mean, for myself, having grown up in a sort of a semi-totalitarian state, this kind of Operation Choke Point definitely smacks of something that would happen in a different country, not in the U.S. I mean, why should the government be allowed to, and why would it try to close down? And I've heard of Operation Choke Point. I mean, they went after, as you said, tobacco, pornography, casino, like all those kinds of businesses.
All of them.
Yeah, and whether or not I agree with a specific line of business it doesn't really matter. I mean, I think if a business is operating legally, or maybe it's operating offshore and not targeting U.S., the U.S. is using its muscle to sort of go after it through like Visa, MasterCard, and the the wire system and all that kind of stuff. It just seems a bit of an overreach to me, but
sure. And even their own inspector general said it was an overreach.
Yeah. Wow. But like, why do you think, so with having knowing about this operation, right? Why do you think it is that some banks, or most banks, 99% of them, are refusing to work with crypto, yet Silvergate and some of the others you mentioned are open to crypto and they have the same licenses? Are they just a higher risk type of a profile, or something else?
Yeah, every bank, especially the smaller banks, tends to specialize in an industry. And especially when you're banking a high-risk industry, again, in air quotes, high risk, like the blockchain industry, you've got to have compliance people who specialize in it. And I think, a lot of it is just that they don't have people who specialize in it. And that's okay. Let them specialize in what they specialize in. In Wyoming, a lot of the small banks bank the energy industry, right? In Nevada, a lot of the small banks probably bank the gaming industry, right? And they've just developed expertise that enable them to check the compliance box. But listen to what we're just talking about. This is not about lending to improve economic growth. This is about basically the compliance folks having enormous power within the banks to reject anything that's outside of the box. And that's the unfortunate long-term effect of this whole program that was put into place. And it's going to take years, if not decades, to reverse the program. Only lasted for 5 years, Operation Choke Point. But and again, like I said, the FDIC's own inspector general was very critical and said it overreached their authority and was wrong. And a lot of people, way stepped out of bounds. But just stopping it doesn't actually reverse the effects, because what's happened is the banks have now built up big bureaucracies in order to comply with all this stuff just to defend themselves. It's a perfectly rational thing for the banks to do. And yet, what's the impact? It means entire industries like crypto that are not well understood, but absolutely can be legitimately banked, to your point. This is how Silvergate does it. They just built up an expertise. And when I talked to the CEO of Silvergate at one of the recent conferences, he said they have 65 compliance professionals that specialize just in onboarding of customers in this industry, right? That's not, not every bank can afford to hire 65 specialists in the crypto industry. So instead they would rather just close the door.
Yeah, absolutely. I think it's probably going to get a little bit easier, in my view, to do this compliance, because there's all kinds of software tools like Chainalysis coming out that will hopefully deliver on, making compliance easier. But I mean, overarchingly, I think this is such a huge waste of resources, and we're all as customers of these banks, we're all paying for it, right? Everything's
of course
expensive.
And this is part of the reason. Also, sorry to interrupt. This is part of the reason why the U.S. economy is stagnant, right? You have all this bureaucracy that isn't actually producing anything, or even producing meaningful law enforcement actions. Right. It's just paperwork, and yet it's stifling innovation. And this is part of the reason why the U.S. economy is not doing very well. We used to have, coming off recessions, 5, 6, 7, 8% growth. When's the last time the U.S. economy has grown like that?
Right.
During the Obama administration, I think only in one quarter did it actually break 3%. And then look at what the Trump administration has had to do to make it break 4%.
Right.
It used to easily break 7 or 8% on its own in terms of growth, especially coming out of recessions. So something's very wrong, and it is that we've put all this bureaucracy at the core of the economy, for sure.
Yeah. And so do you consider yourself, a proponent of a smaller government? I mean, can you say, do you vote Republican, Democrat, Independent? I mean, where do you lean towards?
Oh gosh. I'm definitely pro-freedom, pro-individual, and yes, the massive surveillance state and regulatory state is costing more than it's benefiting. And once, Ronald Reagan said something to the effect of, once a government program, the hardest thing to kill is a government program once it's in place. And it's true. And it just continues inexorably to grow and grow and grow. And eventually I think we're going to hit the balance sheet capacity. I think we're a lot closer to that true debt ceiling than we realize. And that's when things start to really hurt. And I hope it doesn't happen during my lifetime, but I fear the probability of something like that happening during my lifetime is very high.
So you think so? Let's talk about sort of the macroeconomics a little bit. You mentioned the balance sheet. I mean, are you referring to the debt that U.S. is running up, and how much further can it go? I mean, you have go ahead.
Yeah. I did do an analysis on that, and actually gave a speech to the Mises Institute in the spring. This was some of the work that I had been doing at Morgan Stanley as well, just looking at the total non-financial sector debt. It's not just the government debt. That's a misnomer. It's actually the entire U.S. dollar denominated debt that matters. It's the household debt, it's the business debt, and it's the government debt. And of course, it's the central bank's debt. Because dollars, fiat currencies, are IOUs. So it's a little bit of a mind bender, but if all the debt were ever repaid, there'd be no money, because the IOUs, the dollars themselves are IOUs. If you have a dollar bill in your wallet, pull it out and look at it. It's a Federal Reserve note. It's purely debt-based. And the non-financial sector debt has continued to grow at about a 4% rate per year, 2.5 to 3 trillion for several years now, and basically all we're doing is eating our seed corn. We are, as an economy, borrowing faster than we are generating income. And if you think about it on your own personal balance sheet, you can borrow against your future earnings and live high on the hog today, but eventually you're going to have to pay that back, and your future income is going to be reduced as a result of the fact that you borrowed today.
And it sounds like a lot of the social programs are doing that now, right? They're borrowing from themselves to cover their current spending. So do you think we're in a bubble right now? Are we nearing some kind of a debt bubble? Yeah. Okay.
Yeah. Sorry. No, go ahead. I would love to hear your question.
Yeah, I was just going to say, as far as basically, like, are we in a bubble now, do you think? And if we're not in one now, how far are we? And is it a debt bubble or something else that you think is coming upon us?
Yeah, I've been following an economist named Doug Nolan, whose work I've admired for years. And he writes a weekly bulletin called the Credit Bubble Bulletin. And he refers to this as the bubble in everything. And I think he's right. And by the way, I think that's part of what blew up the crypto bubble, is because there's so much money chasing so few goods, or so few investable opportunities, that once this sector became investable by institutions, they piled in, especially hedge funds, they piled in really fast. And that's part of why the prices ran up as much as they could, because they're looking for anything that's cheap. So yes, I do believe that we have emitted so many more dollars and credit substitutes. Dollars. When I say dollars, I'm talking about debt, fiat currency. We've emitted more currency and money substitutes, currency substitutes, than we've generated in real wealth as a globe in the last couple of decades. And the reason we've been able to do that is because we went off any sort of tether that kept our ability to continue to borrow. It kept a cap on our ability to continue to borrow. And that tether happened to be gold, but I'm not a gold bug. I do think that all we need is something that keeps a cap on the ability to borrow, and the ability to basically create dishonest ledgers. And ultimately, that's what's at the core of the economy right now, is a dishonest ledger. And when that ultimately is, the dishonesty is revealed, that's when we're going to switch to something better. And I used to be pretty depressed about all this. It's sort of a downer of a conversation. The more I dug into it, the more concerned I got about my own future and the future of the United States. But I am now optimistic. And it was Bitcoin, ironically, that made me optimistic. And the reason is that it gives everybody a choice, if you want to opt out of that system, which is dishonest, and move into an honest one.
But we need mass adoption for that to happen.
Well, sure. Right? And you can't, you can lead a horse to water, but you can't force it to drink. And it does require time. And a lot of people are focused on their own lives, and they're not going to take the time. So it's incumbent on this industry to make this all easier to handle. It is still very clunky. It is still not easy to invest in cryptocurrencies. People are afraid to own their own keys, so they leave their coins deposited at a company like Coinbase, and don't realize that they don't really own their Bitcoin when they leave their Bitcoins on deposit at Coinbase, right? So, yeah.
So, sorry to interrupt. And not only that, I was going to mention about Coinbase. I mean, most of the quote unquote, open finance systems that Coinbase is touting itself as is really becoming a bank again, because they're facing the same compliance requirements that anyone else, all these banks that we just talked about are facing, right? So they're having to do money laundering checks and compliance and hire maybe even more than 65 people. I don't know how many people they have in the compliance department, but at the end of the day, they're having to do the exact same things that the banks are having to do. And, and I think that's not exactly the right path, personally. But I was going to ask also about Bitcoin and what you see Bitcoin as. Do you see it as a sort of a store of value where it becomes the reserve currency at some point? Do you see it as a payment mechanism? Because as a payment mechanism, perhaps it may or may not be the best today, right? It's at times it's not cheap, but at times it's not fast, and there's other problems. But what do you see Bitcoin?
Well, I do believe that it will ultimately become money. But I think it's not going to look like it does today, right? We're going to have to solve as an industry the scaling problems. We're going to have to speed up the throughput. And I'm very interested in Lightning and other second layer solutions that are anchored to the chain. That's the critical difference. They're honest because they're anchored to the chain, as opposed to the other second layer solutions like a Coinbase or, even the exchanges that you do business with. They're what I would call second layer storage of crypto, but they're not anchored to the chain, and we have no visibility into whether those companies are actually solvent, whether they actually have all the Bitcoin that they say they do and cryptos that they say they do, right? We just don't know. But I do think that ultimately the Bitcoin itself will be money. Right now, it's useful as a high value payment system. It's very useful as that. It's just not very useful as a buy your cup of coffee at Starbucks payment system.
And hope with Bakkt and the Starbucks partnership, actually, that will change. We're all hoping, but we'll see in the near future. Let's go back to, for 1 second, let's go back to your sort of Wall Street roots and crypto. And I'd like to know your thoughts on what are the best, in your opinion, what are some of the best use cases for crypto or blockchain in the traditional finance world? Where do you see that fitting in nicely?
Well, for Bitcoin itself, right now, it's high value payments. It's especially foreign exchange. So anything, right now where I'm not talking about billions, but I'm talking, Bitcoin itself is still trading, even despite the correction in dollar value terms, it's still trading 5-6 billion a day. That's pretty liquid. So there, you can actually use that as a near instant high value payment system for sending payments, especially foreign exchange, in the hundreds of thousands or millions without, and do it on a cheaper basis than going through the traditional banks. So that is the sweet spot right now for Bitcoin. And I think the other sweet spot, of course, is in emerging markets where currency volatility is just a normal part of life. And they want two things. They want a reliable reliable payment system, but they want near instant settlement. And it wasn't until I talked to somebody who grew up in Latin America that I really understood, in the Western world, we're so comfortable that, it's okay that our payments don't settle for, is up to 3 days if you're using an ACH transfer, or our stock trades don't settle for 2 days. Well, in an emerging market with a history of high inflation, you can't allow that to happen because the value will be so reduced by the time the trades settle that you need near instant settlement. So the speed of settlement is actually very important in those markets. And I think ultimately will become very important in the US at some point as well. Because like I said, the underlying stability of the US system is a function of the fact that it's artificial. And the natural state of things is a lot more volatile than we've been used to.
I agree 100%. Just one thing I wanted to mention on the settlement side. I mean, I do think that blockchain technology is going to change a lot of things in the traditional financial sector as well, like the underlying technology itself. I think that one thing you mentioned, the settlements, right? As a sort of a retail investor in the stock market, for example, you use something like E-Trade or Robinhood or whatever, and you everything looks like it's instantly settled, right? You buy a stock. And you think you have possession of that stock. Well, behind the scenes, from what I know, the settlement is something like 2 days after you actually make that transaction. Am I correct?
Oh, yeah. In securities, it doesn't settle for 2 days. And sometimes it actually can take a lot longer than that. You have something called operational shorting, where you just have the broker-dealer fail to deliver, and they can buy themselves another settlement cycle, and then they can just keep operationally shorting again and failing to deliver. And so I mean, it's certainly there are ways around even the 2-day settlement.
Wow. Yeah. So that's what I think a lot of listeners perhaps don't realize is when it looks like, someone purchases a security on E-Trade or any other platform, the broker dealer itself may not even have possession of it for days on end. Right. In the meantime, right, something might, these broker dealers are businesses as well. And so they might go out of business. There might be a crisis. I mean, who knows, right? So there's so many things that might happen in between that time that one thinks that, hey, I bought this the stock, the security, and now I have it. Well, they don't actually have it.
That's right. That's right. And the other thing, I'm deep in the weeds on this because of all the Wyoming stuff. If your broker dealer goes bust after you've given them your money, but before they deliver you the shares they owe you, then you're a general creditor of the highly leveraged financial institution. And a lot of folks learned that lesson the hard way in the Lehman situation and MF Global and Refco. I mean, it's not like we haven't had actual examples of this very thing where you're not segregated, your assets are not yours, and you are a unsecured creditor of a leveraged institution that is going to, give you pennies on the dollar back.
Yeah, wow, this is some very interesting stuff to think about. So we have a few minutes left. I'd love to do a quick lightning round with like a 1 or 2 word answer, if you don't mind.
Oh gosh, okay, we'll try this.
All right, let's give it a try. So crypto or Bitcoin ETF in February, pessimistic or optimistic?
Pessimistic. I think the SEC is going to take a lot longer, given the market manipulation comments that Chairman Clayton made. Okay.
The most recent interesting book you've read?
The Bitcoin Standard by Seyfuddin Amos. That's by far the best book I've read this year.
Cool, and we'll put a link to that later because I was actually checking it out from your earlier comments. It looks extremely interesting. Mm-hmm. One word to describe the crypto markets in 2017.
Crazy.
2018?
Crazier.
And 2019 forecast.
Calmer.
Excellent. Well, what's next for you? I mean, what's coming up on your radar in the next months or further out?
I'm very focused on Wyoming. It's still where I'm spending majority of my time. Also working on getting a book out about all of this. And I don't have a publication date. I'm heads down on the Wyoming stuff for now. And then I'll figure out what I want to do when I grow up.
Awesome. Caitlin, it's been so awesome. It's been really fascinating talking to you.
Yeah, likewise.
Awesome. Thank you so much.
You have such an interesting background too.
I appreciate it. And I hope to have you back on the show sometime soon.
Yeah, likewise. Good luck. Thank you.
Bye-bye.
Bye-bye.